Yo, guys, starting in just a couple minutes. Get started in just a couple minutes. Alright, guys, I'm gonna go ahead and get the call started. Alright, welcome, everyone. Cool. Welcome, everyone. Whether you're here live, whether you're watching the recording, happy Sunday. And thank you guys for tuning in today. So today we are actually going to be reviewing a lot of last week's price action. Okay, and I'm gonna start with a blank chart on all my charts, and we're gonna just break the charts down. Happy Sunday, SJ. Thanks for tuning in, brother. So what we're gonna do is we're going to go over DXY. We're gonna go over the indices, and then I will go over any assets that you guys want me to review. We'll also talk still a little bit more about my forex funds, prop firms, updates. Okay, because there's a lot of just misinformation out there, and so I don't know. There's just a lot of speculation going around, and I feel like it needs to be clarified. So, lots to talk about today. So, guys, check this out. Reviewing it on a monthly perspective, I'm not really going to look for targets and objectives right now. So in terms of me setting up objectives, I usually set those up when the week starts. Technically the week started for the trading week, but my trading week won't really be starting until Tuesday. So that's when I'll be setting my targets and objectives for daily, weekly. So today I just want to purely review. Okay, we've been accumulating out of this area. We've been anticipating longs up until this imbalance up here. We've been looking for some longs up until 105, 106 flat. Okay, Still very much a possibility that we're going to reach there. Maybe not this month, but the following, perhaps. Okay. Last month we had a nice bullish closure, and here you can see that every single week last month closed bullish. Every single week for the past month closed bullish. And I just want to appreciate price action here. Okay, I would really want to appreciate price action here. So we're going to put this everywhere. Okay, right there. And then I want to appreciate price action because look at the way that price action just kept pushing to the upside. Okay, and last week we were calling out some shorts into this area and longs into that high. Okay, the last week previous weekly low did get rated. We did trade into this insufficiency and ended up accumulating out of that area very, very nicely, just as we anticipated to go long into these highs. Okay, that is still the objective. I do still see longs into the highs. Not just that, but I mean, I would love to see September hit this high. Okay, if we retrace after we hit that high, perfect. But I don't want to see price action retrace majorly until we take out that high. Okay, that would really just keep me on the bullish side. But I want to show you guys here on the daily here. 1 second. One sec. There we go. Okay. Sorry, clicked the sensitivity on my mouse. It was just wilding. All right, so in terms of the daily perspective, check this out. Just look at how price action's been moving since the bottom. Okay. Check this out. We have a gap right here. And price action trades right down into that area. Right there. After we traded into a gap up here. Right there. And then that drove us to the upside. And then we traded into this imbalance here. Right. And price action trades above it, trades away from it. And then we find ourselves trading into that imbalance here on the weekly perspective. Excuse me. But you guys can see that price action's just been struggling from this mitigation candle here for quite a while. Right? We came into that and look how many times we rejected. 1, 2, 3, 4, 5. And then finally the 6th day, we finally poked through that price action. Take out previous weekly highs. I believe it was this one right here. Yep. That previous weekly high right there. You guys see how we barely tap into that and then we just melt. So we melt from a previous weekly high. And I believe it was even the high of the month, if I'm not mistaken. Give me 1 second. The high of the month was... Oh, no, it wasn't. It wasn't the high of the month. The high of the month was so close to it. Okay. High of the month is right there, actually. Boom. So we were super close to it. Okay. And then price action melts down straight down into previous weekly low. Okay. And that's where we really wanted to see this accumulation take place. So if you guys want to review how we were looking at price action at the beginning of the week, go review earlier this week's price action, the streams from the earlier this week when we went from price action. I would say like start from Tuesday, watch Tuesday, Wednesday, and then Thursday. See how we were incorrect on the bias at first, and then we reassessed. We got both the points very on point. We got the overall objective for the week, the liquidity objective, and then we got the overall bias for the week right on point. So if you guys want to learn how to increase your level of accuracy, go back and check out those videos, or start tuning in, making sure that you tune in day after day, morning after morning, during the New York sessions. Okay, I will be going live tomorrow. I won't be going live tomorrow at 9 a.m. Eastern, just because, I mean, honestly, there's no reason for me to trade tomorrow. I don't trade anything other than indices. So I personally won't be going live till like about, I want to say like 11 Eastern. Okay, 11 a.m. Eastern. It still will be during New York, but it will be later on. Just, I don't know, to give myself that freedom in the morning. Um, so just get an FYI. But guys, tune in every single day this week. This week is gonna be fire. I have a really good feeling about September. I love the beginning of the week, of the months. I love to set up not just my week, but I love it when I get to set up my monthly, my weekly, and dailies. Right? So I'll show you guys how I set myself up for the beginning of the month. So if you want to review how we got all these targets, go check out last week's recordings, and then you can see how we assessed everything live. Targets, objectives, where we were going, directional bias. Okay, because after we came down here into this previous weekly low, you guys can see that on Friday, on Friday we were mentioning this 4-hour imbalance in the morning. I shared it on Twitter. I also shared it on here with you guys, and we just tapped into that area and we blasted off. Now the area that I wanted to see get tapped into did get tapped into, so I'll show you guys where my objective was primarily. From this low to that high right there, that gap. Okay, from the closing of Monday the 29th to the opening of Tuesday the 30th in May. Okay, in there is actually where I wanted price to see price action return back to. Right in there. It smacked and went through. I did not think that we were gonna, just blast that strongly, but we ended up having a pretty strong reaction for NFP. Really strong reaction for NFP. Okay, you guys can see here there was two things that really attracted my attention here. One, it was the imbalance, the bearish imbalance that was created to the downside here. Okay, and went manipulated price, swept previous daily lows and previous weekly lows. That is no coincidence there. Okay, and then notice what I really liked about this impulsive move to the upside was this guy right here. The fact that we came back, revisited the previous weekly low level, and then pushed to the upside. It was beautiful. 4-hour imbalance. And then, a lot of people would have been waiting down here for this gap, or maybe for the Asian low. But honestly, when you have two overlapping confirmations, you have to anticipate that price action can react out of those areas, especially when this one condition is met. Okay, imbalances are usually respected, especially when major liquidity has been taken. Okay, if you guys see an accumulation against the direction in which we swept liquidity, okay, usually if you're following structure and order flow correctly, those imbalances are your highest probability. It does not need to continue to sweep liquidity once it's taking major liquidity, right? Especially on high volatility news like NFP. Because and I know I used to do analysis, and I used to look like really far away, because I used to think news was every time was kind of have a crazy reaction. And it's not that they don't, but I've learned to look at current price action and keep my eyes close to where current price action is printing. Excuse me. Okay, so we're gonna dive into some NASDAQ next, and we'll we'll go over the only trade that we took last week and why it was the only trade that we took last week. Again, you guys can watch everything live, and I'm not hiding anything from you guys. You guys can see everything live. We took the trade while we were on the stream, and we actually sat on our hands like all week. It's pretty interesting. Most of the moves, if they were any, really happened earlier on this week. There was one other day that maybe had more moves, but yeah, I honestly felt like last week was more of a patience game. I truly do. Okay, so let's go to NASDAQ. And then we'll delete. I think I already deleted everything. Okay, so NASDAQ. I was super bullish on it. Yeah, I mean, super bullish on it. For monthly perspective, it made sense why we would continue pushing to the upside. Previous monthly high does make sense, but first I'm going to be looking for this opening price or closing price. This opening and closing price right there. I really like that area. I'm going to be aiming for that area first before I look at anything else. Now, price is bearish, okay? So on a monthly perspective, that could take a while. So that's why I'm saying I won't be setting that yet. I'm going to see how this week ends up opening before I set my monthly objective. But in terms of the weekly, I mean, we are clearly in a bearish structure. The monthly, though, very bullish. Undeniably bullish. Okay, weekly makes sense. I mean, we are bearish. We did come all the way down here. But in terms of weekly, in the direction that we're printing, we seem very bullish. And so unless we sweep this previous weekly high and distribute very aggressively, I really don't see us returning to these lows yet before we take out some more liquidity to the upside. So definitely a previous weekly high. Back into this breaker right here that we were looking at last week. Okay, in terms of the daily, beautiful price action from Monday right off the bat. Okay, right off the bat, where was it? Right here. Okay, right off the bat, Monday opens and we just start printing to the upside. I really wanted to see price action return back down here, but yeah, last week on Sunday I was just talking to the students, telling them that I want to see price action return down here, but I honestly didn't get any reversal at all until no at all. It just kept pumping, and it pumped in a very odd way. Okay, I don't know if you guys noticed, but we built up liquidity a lot this week. Okay, this previous week. Check this out. That was Monday. Monday, really, all it did, it was respect opening gap, and it really just respected it very, very well. That new week opening gap right there, boom, just respected it, accumulated out of it, and continued pushing to the upside. Very choppy too. I remember this. Very, very choppy. I was just waiting for below the lows, and that condition was never met, and so we never pulled the trigger on Monday. Okay, then come Tuesday, and we were looking at accumulation below Asian lows. Looking for accumulation below Asian lows. I mean, what ended up happening was the opening price. So on this day, the opening price, this was the one day that I personally thought was cleaner than any of the other days in terms of like movement. And it was the day that I finished our prep work way late. I don't know. I didn't even notice that the open took place. And the reason that I didn't notice is because I wasn't paying attention to it. I usually don't pay attention to it because I don't trade it. But there was 8:30 a.m. news that morning. And so I should have been more attentive. And moving forward, I will definitely be more attentive to news. This stream is really helping me stay on top of news. I want to become a better fundamental trader, and so an analyst. So as we continue to study these fundamentals or the economic calendar. On Tuesday, we had some, I think it was PPI or PMI news release on 8:30 a.m. Eastern. And so when we have those nice red folders at 8:30 a.m. Eastern, yeah, and it's one of those, not just a red folder, but a high volatility folder or a news event. When you have one of those and you recognize them, always, excuse me, Jesus. Okay, so always when trading news at the 8 a.m. to 8:30 open, or even like as long as it's before the 9:30 stock exchange open, if you're gonna trade indices, I only suggest this for indices. I don't suggest it for anything else, but only for indices. To trade at the open. Trade at the open. That's probably like the only times that I allow myself to trade before 10 a.m. And so this was one of the days that I totally missed it. I'm not gonna lie to you guys. I fumbled the bag this day. Everybody was with me, and I totally fumbled it because I missed it 100%. I was just like, man, I didn't look at the 5 minute. I was, by the time I got to this time frame that day, it was gone. It was so instant. Yeah, within the next 10 minutes, it was just all freaking gone. It just kept going too, very aggressively, right? Tuesday was a very aggressive day, but just look at the way. Imbalance, respect. Imbalance. Imbalance, respect. Look at that, the way that we traded into that imbalance there. Respected it. Imbalance here. Just kept going. To the end of the day. Beautiful order flow. Beautiful order flow delivery. So there was ways to get into this right here, okay? I'm not gonna lie to you guys, there was a lot of ways to get into this. The main way would have been keep it nice, short, and like easy. Check this out. You guys see this 1 hour time frame on the right? Or I believe it's the 15 minute. Yeah, it's the 15 minute. Yeah. Okay, the 15 minutes here on the right. So this guy right here, these guys are going to become your guys' best friends. You guys are going to see me play these a lot. And these are called breakers, okay? And so this breaker right here, you guys see this white candle right here on the right? That's the 15 minutes. So this 15-minute breaker here, okay? That whole thing right there, from wick to wick, is, yeah, that whole thing right there is your breaker, okay? How do you identify imbalance when price will continue in order flow? It's when liquidity. So for example, you never really know what the objective is for the day. Like we can't really predict the market, right? But what we can do is have objectives. So this day I was aiming for this imbalance right here. Okay, and you guys remember the reason that I was looking at this whole range was because what's missing from this high to this low? What's missing from this high to this low? Do you guys remember? This is a great question, and I think it's going to lead to a great lecture. So, do you remember what's from missing from this high to this low? I mentioned it on Tuesday when we were here on the stream. I mentioned it why I was looking for price action to trade through it, because something is missing from it. What's missing? If this was a true structure, then we would need to, distribute and move to the downside. That's what structure is, right? This is an area that swept liquidity. Look at that. Swept all that liquidity, created imbalance. Why wouldn't you want to short it there, right? But the reason that I was telling you guys that I wasn't going to short it and I was looking for price action to trade through it was because Exactly, Eddie. There was no liquidity. Okay, there has to be liquidity, and so there was liquidity right here, 50% and above, right here, previous daily high. But what happened when we traded through it? Look, the first candle traded through it and just closed up there. There was no rejection. There was no impulsive, downside movement. There was no imbalance created after it. Nothing. Right? So the reaction and price action clearly indicates that we were going to continue pushing to the upside. So that's why I was looking from the lower end of the range. So notice 50% and below. We're going to stretch this below so that way you guys can see it as we're studying it on the smaller time frames, right? We're going to look in discount for areas, for the next area that's going to give us enough support, right, to continue pushing to the upside. All right, so you can see here, one sec. Okay. So we come into this previous area of support, 50% and below. We come back into discounted price action. Okay. And then you have to identify the liquidity objective for the day, or the objective for the day. Okay. Price action moves from one institutional level to another. Okay. Price moves from one institutional level to another. As you can learn to identify which is the next most probable institutional level that price action is going to trade from and to, that's when you start acknowledging the imbalances. I feel like acknowledging the imbalances that will be respected is the last part that anybody should be really worried about. I feel like the first part that you guys need to understand is how order flow works. It's like how price action moves from one place to another. Because then if you can understand why price needs to get from point A to point B, then you can understand that between the point from point A to point B is a safe trajectory for order flow to continue following. Right? Because you don't want to end up in some choppy ass price action. You don't, right? Like no one does. No one likes to be in some choppy ass price action when you're in a trade, when you're actively trading. So, when in terms of finding the correct imbalance that will be respected, I feel like the better answer would be to guide you to figure out point A to B. That's all you guys need to know. You only need to know how to get from where you're at currently, from where price action is at currently, to the next point that it's traveling to. It doesn't have to be a higher time frame point. It doesn't have to be a fucking weekly, daily. It doesn't, guys. It doesn't have to be too far. It can be the very next point in which price action may be attracted to. And it moves from one point to another. One point to another. See, from 50% and below this 1 hour order block right here, okay, all we did was push to the upside, right? Back into premium. And then we went into this gap right here. Yeah, no, we haven't. Oh, shit, my bad. There it is. Sorry. I was like, we haven't traded into it. Yeah, no, we definitely did. And then we traded into that gap. Cool. And then after that gap, what's next? Did we get a rejection? Did we distribute? Nope. We just closed right up there. When you guys gotta understand, structure isn't the only thing that can indicate a bullish price action. Candle closures above levels of support and resistance can indicate strength or weakness, bullishness or bearishness. The fact that we came over this imbalance right here, the fact that the fact that we're coming through these levels of resistance in premium price action, 50% and below, where we should be redistributing, but we're trading through it and closing above those strong levels of resistance, then those areas become our support and we just continue pushing to the upside. Right? You see how price action just comes down? You guys see that? That's exactly what I'm talking about right there. I'm glad that this happened. This is exactly what I'm talking about. Once you understand that price action needs to, once you understand all the institutional levels and how price action needs to get from one to the other, and to the next, then you can properly find imbalances and order flow that gets you from point A to point B. But you first need to know how to get from point A to point B accurately. Because that's the goal. You want to have the correct directional bias and the correct objectives. You need to be able to understand why price action is being drawn to these levels. So check it out. We were drawn to this level. We closed above it. But check this out. Right after, look at the very next candle. Trade down into it. Now what was once a target or a level of resistance is our newfound support. When price action trades through it, closes above it. Now this is bullish order flow, and next I gotta look for the next upside target that will get me my objective. So now you have, for example, this rejection block up here. Cool, that's the next area. Boom, we get to the rejection block and then reject to the downside. What's the next area that we can reject down to? Probably this imbalance or this gap, or maybe just continue pushing to the upside from that rejection block to that high. Boom. Continue pushing to the upside. There it is, the high. We come down into that order block, that bearish one, that bullish order block right here. We come down, look, we trade above it. That is bullish order flow. When you push down, any state in change of delivery, and any change in the state of delivery. For example, we were pushing to the upside, and then we changed the state of delivery by pushing down and printing bearish. The moment we overtook this candle and traded and closed above it, that's bullish order flow. So the very next candle closes above it, comes down. Look at the way that it printed. It didn't print up, down, up, down. It printed down first into this candle in order block and push to the upside. Right? So now if we follow our order block theory, right, then that's where you start looking for this order block and imbalances, right? This imbalance theory. So now I know from this imbalance right here, from our level of support right here, right? Once we closed above it, I look for the imbalance that lines up with that area of support. And then boom, you have your entry right there. Right? To the next bullish order flow. To the next point, institutional level to the upside. Which was, we said, that rejection block. Look at the simplicity of that. A 1 of 3. Maybe it wasn't the sexiest fucking trade because it kept coming back and forth. But hey, that trade was there. Very attractive and very much valid. Why did I get all the way down here? Because that's the overlap between the imbalance and that gap. Or that was that gap, the daily gap. Right? And you guys see that at the end of the day, final target was a nice 104.5. You see what I mean? So as long as you understand the next institutional level, there's no reason why you wouldn't be able to follow order flow. Right? Because once you hit one, then you can expect rejection. Once you hit one, then you can expect a retracement. But until you hit one, then, we're going to trade it through. So, that's how you follow order flow. You have to learn and identify all of them. Not just the imbalances for entries, but all of them. Because then that's what clarifies the entries, is when you start clarifying everything else. If that makes sense, drop some threes in the chat. That Tuesday made sense, a lot more sense the way we broke it down. Like, we didn't catch the entirety of that move, right? But here we are, like, we definitely can capitalize even on smaller portions of moves just by following order flow. It's institutional, from one institutional level to another. you guys got to understand the way that I see price action is just everything just support and resistance. Oh, that's a gap. Cool. That's, is price below it or above it? If it's above it, price is above. Okay, that's support. If price is below it, cool. Then that's resistance. Cool. And so I just mark out my areas and I look for price action to find support and find resistance. You just gotta keep it very simple. Make it make sense. Make it make sense for you. If it don't make sense, then it won't make money. So make it make sense. If a lot of you may sometimes be confused because you're not making your trading make sense. You have to make it sense for you. Like, you can't just go every day not knowing what the fuck just happened to your account. You can't go every day not knowing what happened to your trade. You can't. You have to know what's going on. One second. Okay, sorry. We have to know what's going on, right? And with that level, like deep level of understanding, then you can anticipate, what imbalances are higher probable versus the lower probability imbalances. Because I'm not gonna lie to you, there are days where I do get trapped in stuff like this, and it does happen. Sometimes price action is just straight up building liquidity, and I'll test it, But the only way that I'll find out that it's just building up liquidity sometimes is by interacting with the market itself, right? Like, sometimes the interaction itself is what you need to get a feel of what's going on in the market and get feedback. Don't think that you got it wrong, but listen to what the market is telling you. Okay? Not in terms of right or wrong. So as we took this whole range out, I mean, it was fantastic. We took that whole range out. We broke to the upside. We confirmed that bullishness. We took out last week's high. And then, I mean, after that, it was very much a matter of when are we going to get back into this imbalance up here. And I believe it was like the very next day. Nope, it wasn't. Friday? Thursday. That's Thursday right there. Created that double top. And then Friday comes through. And just, yeah. Friday comes through and melts it through. But let's go through Friday's price action, okay? Oh, wait, 1 second. I want to do, yeah. So, notice this. So, after we took out that high, okay? After we took out that high, notice there wasn't like any rejection. So, this is something that I look for. When I see something close like this after taking out a major high, I immediately continue to look higher. Because I understand that the point of rejection may not have been cleared yet. The point of rejection per price may be a little bit higher. So my eyes are immediately drawn to the next level of distribution or next level of resistance. Alright, so of course, this rejection block here, we trade into it. Boom. And then notice we trade into that rejection block, but no rejection, right? I mean, no resistance. Price trades into it and closes above. Cool. Next level, which was this imbalance. That day hit it very fast. So after that, created that double top. And of course, at the end, it was that high. Right? So now we traded into a weekly breaker. Okay. We traded into that weekly breaker right here. This purple one. That weekly bearish breaker. So once we trade into that, I'm anticipating a retracement at least from a weekly point to a daily support. From a weekly resistance, level of resistance, to a daily level of support. Okay. And the reason I anticipated that was because the previous day when we swept liquidity, we're coming into this previous area of distribution, aka our breaker. right? When we were coming and trading into that area, we rejected. So that showed me weakness is already being embedded into the market. Maybe we need a little bit more liquidity. And you can see that double top got clapped easily. Okay. That double top got clapped. We were looking for, I think our newest objective was 15,550, and yeah, I mean we smacked that super hard. 15,550. Yeah, it was this imbalance right here. So we smacked that. We traded down, and I'll show you guys after we had taken out that level of liquidity, taken out previous daily high. It was just a matter of looking at previous daily low, right? Coming up here, looking at price action. We came in at 930, right? And so price action started moving towards the downside. Now I may not have caught the move to down, this one right here, but we definitely noticed what the bullish imbalance that came up, swept previous high and previous weekly highs, and traded into that bearish imbalance to the left on the daily perspective. Then we distributed and traded directly down with another insufficiency, overcoming or overtaking this bullish order flow and now turning it into a bearish order flow. Okay, and then on top of that, I really like the fact that we just created more liquidity. I thought that was way good. Okay, and so you got imbalance, overlap on the 15. You have a failure to create a new high right here. So you get a high, higher low, lower high, lower low. So that's your breaker right here. I mean, that's your mitigation candle. And then to top it off, there was a nice insufficiency here. Okay, so trade was taken this way, insufficiency. If you guys would like to review this trade, it is on the Friday recording, Friday stream. And then yeah, I mean, this is basically how we took it. It's a nice 1 to 5, I think. 1 to 6. Oh, it was a 1 to 5 because I took it a bit lower. Like my entry was probably like right there, if not a little bit lower. But I mean, 1 to 5 was still in a 1 to 5. It was nice clean one. And then it went overall to our daily objective that we mentioned, from one institutional level to another, right? Because then from here, look how we accumulate. We come back down to that level and just pull away. When did the new day open? Oh no, wait, this is Fridays. There it is. Yeah, no, super clean Friday. Really good way to end the week. This was the only trade that we took all week. Everything else didn't make sense to me yet. No, but we pulled the trigger once last week, and it was this banger. So congrats to all of you guys who did participate on the shorts on Friday. Congrats to all the people that were very patient and didn't participate in anything at all, because that's also a big win. So wait, hold on, actually. Let me post this for my Friday journal. So I like to take notes for NFP. And basically I just put just so you guys know, like, how I take notes too. I put 9:30 open, Opening price gave NFP move. And I have lots of months and months and months and months and months that NFP does this. So that's why I keep backing up my research. So let's go with Dow. What trades did you guys take this previous week? I'm curious. What trades did you guys take? Curious. Let me know in the chat while I drink some water. What trades did you guys take this week? What asset did you take? Was it longs, shorts? Did you guys trade NFP? What trades did you guys take this week? I'm very curious. Very curious to see. Or maybe you guys didn't trade this week. Maybe you guys also sat on your hands this week for the most part. That'd be cool too. All right, guys. Actually, you know what? I also want to tell you guys that was the first time that on Inner Wealth we've gone live all 5 days of the week for New Year's session. So I just want to say, guys, I don't usually invite people into that space. Like I like to trade alone, but I really enjoyed my time last week and it was really fun. So we're going to keep running it up, right? And dude, you know what's crazy? Yesterday I was so sick. I don't know what happened. Right at the beginning of the stream, boom. First day got a cold. I don't know why, but then yesterday it was like my worst day feeling in terms of cold. Like it was the strongest day of the cold. And I was just, dude, took some fucking NyQuil, and I don't know. I totally spaced the stream yesterday. I don't know if anybody noticed, but yeah, there was no stream yesterday. I totally spaced it. I was so sick and just droopy all day. It was horrible. I laid in bed all day. I didn't even notice the day went by and no stream. Like I just laid in my bed and closed the curtains. It was just really I had just a horrible headache. Last thing I wanted to do was be on front of a monitor, so it made sense why I didn't hop on, but it was just, I blew the fucking challenge. So now, because I blew the 30-day challenge, that means that we get to try it again here soon. That doesn't mean I'm not gonna finish it. I'm definitely gonna still finish it and keep going, but I already failed it, so we're gonna try it again next year, or maybe towards the end of the year, and just keep pushing ourselves. You know what I mean? Keep doing a 30-day stream, keep becoming better, keep pushing ourselves and striving to become a better version of ourselves, and keeping ourselves accountable to showing up, keeping our community accountable, keeping each other accountable. So it is what it is. It just gives me another opportunity to try it again. So that's awesome. I'm gonna continue to push myself throughout the next 30 days, and I just appreciate your guys' support regardless of me showing up yesterday or not. It's okay. So on Dow Jones, bearish overall. Okay, and I'll tell you guys why. I was looking here. Okay, bullish order flow, taken by bearish order flow, right? So I wanted price action to stay 50% and above, and come into this area. Okay, at the beginning of the week on Sunday, I wanted us to go down here, but obviously things changed. By Tuesday, my objective was at the opening of that mitigation candle. So the opening of that mitigation candle was the objective. Yeah, the objective for Dow, 1 second, was 34. Let's see. What was the objective? Oh, 34,420. Did we achieve? No, that was the daily. 1 second. Oh, okay. 35,100 was the second one. Ah, okay. I was looking at this previous weekly low right here. Yeah, it was 35 flat. 35 flat. Okay, but I just like to round stuff to like the closest whole number. But this was really the original area that attracted most of my attention, is this mitigation candle. Okay, and of course, Dow ended up hitting that on Thursday instead of Friday, and Dow ends up creating the high of the week on Thursday, the high of the week on Friday for Nasdaq, high of the week on Friday for S&P. That was the only one that created it on Thursday, right? So there's a bit of a divergence there, and Dow trades higher, does the same thing on Monday that that Nasdaq did. Very very liquidated longs. Okay, trade to the opposite side as well. There was news that day, and then we just pop off. I'm like, dang, I was really hoping to get in here a lot earlier, but I mean, once we hit all these objectives, I was okay, cool. Like, there's I felt a lot better because there was the objective, and even though I wasn't part of the longs, I felt like the objective and the bias was very much on point. And I like seeing price action play out, and sometimes when there's a lot of liquidity, I'm really happy that I was able to see that. You know what I mean? To see that price action was building up liquidity, and identify that I'm either going to identify the liquidity or become the liquidity, right? So we distribute here. We come into this breaker. We come into the opening price of the day. Nice little gap there. Yeah, nice little gap here on the 1 hour time frame. You guys can see it a little bit better. It's kind of hard to see this gap. But we'll notice like price action just trades right into it. And then distributes on Friday. Okay, so we did make that nice distribution on Thursday. And I believe I was just waiting for longs to set up this day, and so I didn't participate in any of these shorts. Not that there was much. Yeah, there wasn't much. Here we have this like breaker after we swept all that liquidity. 5 minute. This was the day that I wanted that long below these lows, and then we ended up closing it, and then we ended up shorting, and we identified that breaker. Oh shit, look at that breaker. Ended up going all the way down there. I honestly was just aiming for the Asian low, but I mean, price just had other plans. In terms of Dow, it was very tough for me to identify an entry on Friday. So for me, Dow was more of a sitting out asset for Friday. At least to me, it was the least attractive out of all of them. But yeah, you guys see how just price action just kept kind of building up liquidity. There was clean days. There was 1 and 2 clean days. Right? Nasdaq was a lot cleaner than Dow, but there was clean days. There was opportunities as well. Just had to be patient. But anyways, yeah, I mean, we didn't really trade S&P too much, so I'm not really gonna go over S&P. But yeah, guys, unless you guys have any other charts, questions, or observations, I will be on tomorrow at 11 a.m. Eastern time. We'll be on. If you guys have any questions about any of the videos that I've done, any questions about any of the markups, any of the teachings that I've had with you guys, please don't hesitate to reach out to me. I have my like one-on-one coachings. I have free consultations. I have, Telegram, which you guys can directly reach me at. And yeah, everything's on the description. The link is on the description below. So guys, again, thank you so much. Please guys, it helps the channel out so much when you guys like and comment or any of the videos, or when you guys share this with any of your communities. It supports the channel a lot. Remember, we are going to be doing the giveaway details. I need to figure out what this whole prop firm thing is gonna go with. You know what I mean? The giveaway was a 50K challenge. Now, with everything that's going on with prop firms, okay? With everything that's going on with prop firms, before we go, I want you guys' attention for like 5 more minutes. Before we go, with everything that's going on with prop firms, guys, I don't think prop firms are going anywhere. Like the industry itself, I just don't see how anyone can speculate that whole industry is gonna go away. I don't see a lot of regulators that are traders. There's no way that a trader could know regulations to that depth. You know what I mean? Like, there's not people, I don't know many traders that study regulations like that. And so stop believing everything you guys see in the internet. Sometimes, like, when there's chaos, it's just best to like not be on social media. Like, I really, this weekend, one of the weekends was pretty nice, because I mean, as soon as all this stuff about MyForex funds, I went from going on Instagram to just staying on Twitter, because Instagram was just, everybody was freaking out. Twitter had I follow more prop firms, more professional pages, but I had to stay off Instagram because just everybody was talking about it. Prop firms going to ship, prop firms shutting down, all this stuff. And honestly, everyone's going to speculate whatever they want. All I can tell you guys, in the investment world, nothing's 100% guaranteed. The only thing that's guaranteed is that you will fail in the process. But success, gains, profits is not guaranteed. Accounts are not guaranteed. Even in a regulated broker, you have risks. Even in a regulated broker, you are going to have risks. So, with that, guys, just understand that nothing is 100%, and we need to continue moving forward. If we continue to, be upset about an account that you may have lost, shit, like everyone, I can tell you a bunch of students that I had, I've always referred my students to MyForex funds. And so I know a lot of people that lost their account or are unable to continue their challenge, don't know what's going to happen, but continue to move forward. You know what I mean? They don't slow down. That don't stop them. It makes them aware that changes are happening around them. But that's why we are traders. Like, we are here to adapt. I want to tell you guys, I mean, I've been in the trading industry for almost 5 years, and I can tell you with honesty that this type of stuff happens a lot. In the past like 3 years, it's happened a lot. Regulations always come through. Changes always happen. Some prop firms, some maybe big, maybe small prop firm will go down. Some shady work is still being done out there, and regulations will still come about, especially when you have prop firms popping up, a new prop firm popping up every week. It was getting a little ridiculous. These rug pulls, these bankrupt fucking prop firms, it was getting a little absurd. So, I mean, what you guys have to understand, regulations in this industry is probably a positive thing, because it's gonna weed out all the bullshit projects. You know what I mean? All the shady prop firms. It's not gonna be such a like you have to get referred into a prop firm. You know, you have to know somebody that's already gotten paid that, or you have to do this fucking balls deep research because you know you don't. It's a new prop firm and it's not credible. And it shouldn't be like that, honestly. It should be a little bit more trustworthy than that. And the reason it's not is because these prop firms are popping up left and right and going down left and right. So, move forward. What I told one of my students, I felt like it's what I live by. Every decision in your life, take it as a trade. Every decision in your life. Right? Because what it took for you to take a trade was you made the decision to take a trade. Right? But every decision in your life is a trade. Every decision. And if you start realizing that no decision is more overvalued than the other one, than the previous one, and all your decisions have just as much value, right? All your decisions are just as important as the previous one. Right? Then you start realizing that these important decisions are going to take risks. And you have to learn to accept those risks. Right? We have to learn to accept these risks. They're going to happen. It happened to me when I was fully funded. I mean, at least with my Forex funds, I'm not fully funded. But I've been fully funded before and stripped away from profitable accounts. It's gonna happen. It is what it is. You know what I mean? That type of thing is gonna happen. And what we do is move forward. And what we do is move smart. What we do is not rush into anything. What we're not gonna do is go to a fucking prop firm that's giving you a 40% discount. Guys, anybody giving you guys more than 20% is clearly gonna get fucked. And then they're just trying to squeeze in as many customers and close in as many deals before they get effed. What did the CEO answer this question? Bro, I don't know if we should do some petty stuff like that for the giveaway. Like, what color is the CEO the CEO of my Forex Funds Bugatti? What is the color of Bugatti, the CEO of my Forex Funds? For the giveaway, like we should do some question like that. But I don't know if I want to. I feel like I'm attacking my Forex Funds, but I'm just saying. I just hope you guys know the word is out there that the guy, you know, after this whole thing happened, like got shut down. He or maybe he was already in the process of getting a Bugatti and it just pulled up, but he pulled up with a Bugatti recently. So, you know, what color is his Bugatti? That's probably gonna be the giveaway question. And whoever answers all that, you know, in a post, I'll post it on Instagram and whatever. But I'll give you guys more detail. The main reason I was unable to give you guys detail was because I'm not sure if a funded account is still something that I want to give away with the mass change that's happening right now. You know, we're gonna probably adopt some new regulations, which is awesome. They're gonna clean up the industry, which is great. And so I don't want to, you know, give somebody an account that's gonna get taken away from them in like 2 weeks. I'd rather give you guys something, you know, that's gonna equally or greater add value to you. So equally or greater add value to you in your day and your time. So we'll figure that something out. We got the question already. Okay, what's the color of what color of Bugattis does the CEO of my Forex Funds have? Because yeah, he apparently pulled up with a new one. So anyways, guys, be careful with these prop firms. Don't jump into anything. Be cautious with these shady prop firms. If they're throwing shade at other prop firms, if there are prop firms out there that are just throwing shade at my Forex Funds to what happened to them, honestly, those are pretty untrustworthy prop firms. Like, don't go with a shady prop firm, the one that's like saying, discount code my frozen funds, or discount code lost and found. Like, bro, I've seen some funny ass discount codes. Okay, some funny ass discount codes. Maybe that will be the giveaway. What's the funniest discount code you guys seen all month? I don't know. We'll figure it out. There's some funny shit out there right now. Okay, and I don't want you guys to, have mixed feelings about what you should be doing. Please don't think because they're most credible. Look, my forex funds, they may not have been around as much as FTMO, but they were the most credible. I don't care what anybody says. That at the moment, they were the most credible prop firm at their time. They were the most credible. That's the one that everybody was talking about going to using. So now everybody's gonna move to the next most credible prop firm, and everybody's gonna probably say my forex funds. I mean, FTMO. Guys, what if FTMO has the same fucking, just wait it out. What's happening is we're giving a couple of days of vacation. Okay, some of us have been over trading a little too much, and we need some chill the fuck out and go enjoy some time by yourself without any trading. Just give yourself some time. Give yourself some time to study. Give yourself some time to prepare for the next challenge. Give yourself time to prepare a nice challenge trading plan. Give yourself enough time to prepare a nice template to journal your trades. Give yourself enough time to prepare, because proper preparation prevents poor performance. And with that, guys, you guys will end up killing it when they clear out all these regulations, when all the fuzz is over, when everything is nice and clear. Just wait for the market to tell you what to do. That's all. That's what we do every day for price action. We wait for price action to tell us what to do. That's what we need to do with this whole thing. We just need to wait for the industry to tell us what to do. What the market's going to tell us what it's going to do. If the industry gets regulated, man, good for us. If it doesn't, shit, good for us. Regardless, we're still good, and we're going to run it up. So, guys, take care. Have an amazing Sunday. Have an amazing rest of your day. Have an amazing Labor Day weekend, wherever it is that you guys are tuning in from, whenever it is that you guys are tuning in from. Appreciate every single one of you. Much, much love. Please let me know in the comments what color Bugatti the CEO of My Forex Funds got, and I'll talk to you guys soon. Peace.